Hi guys, this is Martin from Live Markets. Once again, we welcome you to another trading day. We just getting started for trading today. We had a very tepidation session, which resulted in a little bit of pips, but we saw the euro dollar break below the 1.1660. Now that level is going to become like a resistance. The break was very important, and it hadn't come yesterday despite a hawkish FOMC, but as it always happens, post a few hours after the FOMC, market starts to follow through on the trend. We'll just take a look at, we have a few trades that are waiting closures. We did close a few, but we have a decent medium exposure on the euro dollar short trade. As you know, we have been very short, and we have been short since 1.179. You remember, if you just look back on trading, and this whole trend line here, which has been blocking the moves, and even on Monday and Tuesday. Now this is the Monday Tuesday movement, as it is going into this trend line. It did seem it was breaking this, and we emailed all our clients very specially that do not get worried, this is just a month-end buying with the Bupa central bank, and we explained it to you how it works. It's because of UK's payment that gets paid to European for the membership and the market access, so they convert that membership from pound to euro, and that results in a little bit of $5-6 billion of euro they're buying, which happens, and it happened on Monday and Tuesday. So hopefully you all listen to us, and long-term customers will know, but there are some who joined newly, so we just needed to alert you that don't get worried here. Even though the open drawdown had just gone above a little higher, but as we always say, the closed drawdown will not go higher than 30%. As you can see now, we're very positive for July, and we're very positive for August on the closed trade. So things are looking good here, and then probably on Wednesday we dropped below. In fact, on Tuesday itself we dropped below, and that was the first sign that they were finished with the buying. And then since then it's just been a collapse, and we did actually use the word collapse. We did say that after 1.174 or 5 we'll see a collapse. It didn't touch 1.1750, and then the whole thing just collapsed now, and the collapse is now continuing, and as you can see what's happening now, this is the 4-hourly chart. Just now there's a lower trend line, as many of you know. These trend lines are really not exact, so but just gives you a sense of where the market is. Now this is the trend line. As you can see, now we're right at the trend line. We were at the upper trend line. This whole flag is now consolidating, it's tightening its range, and any trading school will tell you that a flag formation at the bottom of a trend is a pattern for continuation. A flag formation at the top of an uptrend is a continuation pattern for the uptrend to continue. There are very few occasions where a flag will form against the trend. So this whole trend business here, this whole consolidation will mean that we're going to break lower. The question is, when are we going to break? Today, tomorrow, or are we going to see one more bounce to 1.7? Now my money is that we are not going to see any more bounces. We're going to just follow through, because we, at the month beginning, all the major risk events are out. ECB's out, BOE will be out in about a few hours. That has very little relevance here, and FOMC is out. So all these events are now clearly out of the way. Excuse me. So we see this break happening as we speak. Once we're below 1.16, that's where we believe the acceleration will happen. The reason why, there are two important levels to note on the downside where we see there will be major acceleration. One is 1.15. Now there's a $2.8 billion option interest that is at 1.16. 1.15, sorry. So as and when that level breaks, we're going to see acceleration down, because the option players will start to cover their position. Those who are with the put writers, they will start selling the euro dollar to cover the option risk. Excuse me. There's some options at 1.16, but after yesterday's FOMC, much of that has been pulled out, so we should see a smooth flow down with no major acceleration. It's just going to be a slow and steady fall through all these levels down to 1.155. So if I have to take a guess, we're going to be at 1.155 pre NFP, and on NFP on Friday we could just crash through 1.15 to 1.14, which is the target we have been looking for some time. And as you know, we are short from 1.1780. We've been closing, but you know the upper side, the place from where we have been short is 1.1780. So we're dead right on our trade. We're very confident, and we are so confident that we're not ready to trade any other pair right now. Algo2 is trading the USD JPY as well. It trades the GBP USD as well, but we just blocked out all because we see maximum amount of money to be made, pips to be made here in the euro dollar, and the reasons just very clear. Now you can look at the USD JPY, you won't see such a clear pattern, though we did suggest that you should go long at 101.5, and I'm sure you made some money to 112, and now we're back to the support, and I think it's a great time to long again. But again, the bang for the buck, as normal usage is in the euro dollar. USD JPY will be limited. I don't see upside beyond 113.5. If it does, well, it's going to be surprising and it's going to pull us in for longs. But otherwise we need to ignore the USD JPY till the euro dollar is so heavily exposed. And because we can't go over the exposure limit right now, which is why we're not trading other pairs, so we're very comfortably placed, and we see a break up this level here at 1.165. we could see some maybe every rally in the euro dollar is to be sold. We could see a minor retracement to 1.166. that's about it. With a couple of levels on the upside which are important to note. Yesterday, now this is a daily chart, and this is a whole head and shoulders, and you know the reason why we got so bearish is this collapse here, and this collapse went below the lows here. That was the sign of things to come. That and it did come back a little bit, but again, just a break of this low here, this left shoulder here, meant that this thing expected, and this was intending to go much lower. So we will be, you know, the ultimate place where we're looking for this trade pair to go down is 1.02. Some people have called for parity as well. They believe that once Donald Trump imposes the auto tariffs on Germany, we are going to see a 10% devaluation in the euro dollar. It's going to be very similar to the way the USD yuan reacted, 10% devaluation there as well. So we're waiting for that, and I think it could happen any time. It got delayed because of the EU commissioners meeting with Donald Trump in the last week of July, and that just delayed the inevitable. But I think with the French President Macron saying that he will not be able to pull out tariffs on US agriculture products, as a first sign that Europe is not united and it's not behind the proposals made by the EU Commissioner to Trump, and Trump will not take that lightly. He will go after them, and just knowing the kind of president he is, he does not take a step back till it hurts him. So right now US economy is doing very well, and he's not going to take a step back. He's going to push for the auto tariffs to happen very soon. Watch this trend line now. This is a daily chart, and he said this green line is what is our benchmark for trading. This is what we normally base our uptrends and downtrends. It goes about, and if this is slanting higher, that's an uptrend. If this is slanting down, it's a downtrend. It's just as simple as that. And then when prices go up and above this, that means that there's a lot of a range-based trading. So if you have a range-based system, you can go short, you can go long here and short here, but there is you can do that, but no, ultimately the winnings that you make out of this range-based trading up and down is just not worth, because ultimately you get stopped out. And we prefer the rally selling, especially for this pair on euro dollar. So the model is so bearish, therefore we are not going to go long. We are not going to take long here at the lower trend lines. That we leave for day traders who do this stuff, but we're going to be based on the model, and model doesn't go against the trend, and that's why it has such a high win rate. So we fully see this breaking down. If you're trading manual, which I believe some of you are, we suggest that you keep heavy exposure. You don't get such opportunities too often, so just mark the downside here. The first level is 1.15, and once that is broken, we see acceleration to 1.414 in probably 4 hours or 6 hours time, basically in one session. So just mark those levels. Right now we are at this trend line. We should see some move down to 1.16 today. we'll be trading it, but we'll start lightening up on the exposure a little bit as we get into this zone here, though I'm not sure if we should, because it just looks a done deal. It just looks such a strong negative move here. So that's just euro dollar, but we'll just have to abide by the risk management and the risk exposure, and then keep the exposure low. What about USDC? We have a very smallish trade on this. Now why have we not closed this trade? I know we got stuck here, and we allowed this to fall here. It didn't hurt us much, but why haven't we closed? Well, the reason is very simple. You look at this green line, which is our trend line. Now this is huge. It is very strongly trending higher. And it has flattened out a little bit, but it hasn't downtrended it, and just below there is this bigger uptrend line which is catching up with this. So I don't see this falling down. I see we going higher and higher to 1.03. Now this is another sign of what is going to come through the dollar trade or the dollar index. USD CHF, as you know, long-time traders will know that it is a proxy for the dollar index. What USD CHF does is what dollar index does with a few days lag. So if we see positive here, we'll see positive in the dollar index. So this is like a W-shaped uptrend which should begin probably today, tomorrow. We're now very, very close to the continuation of this trend. Possibly it could happen NFP, or it could be today itself. So just beware and just be on your trading desk. You don't want to be vacationing at this time. You can hang your vacations in November, December. We don't see much movement then, but this is just a very important one for the dollar index, and we see the up swings 10% in a leverage market like this is like 100% in your forex account, and we live to trade such winners, and this is what it's all about, to be at live markets. So to be able to identify these trends way before others and be patient with them, and we explained on why we have been short in euro dollar. We're not closing these positions. We're ready to hang it over for weeks. We have been in for 4 weeks now, and it's tested the patience of best of traders, but we are very much in that trade and overexposed and very well exposed as well. Why? Because if you look at the holding cost, it's nil. Some of you have swap cost. You've got positive carry of $50,000. And those who are trading into the millions, you've got $50,000, and that's just, I know it might be low for some of you, but it's, well, $50,000 is quite a heavy amount, no matter by which measure you measure, but it's just free money that the market is giving. So hold it long, and as long as prices are in this range, it pays to just hold on instead of going up and down, go buying long here and go shorting here. Just hold on to your shorts, and the market keeps paying you swap money. So that's the euro dollar, dollar index, USDC. What else can I take a look at? USD JPY. We don't like the uptrend here. We do see that this is going to 114, but it's just something about this, this blue line, which is a 200 moving average, is pushing down. And as you know, these lines have orders, and they keep attracting prices to it. So this push down here, there's the medium term line, the 50 DMA is pushing higher. So there are various forces here which is pulling prices up and down, and we can see how it goes up, it goes down, it goes up, down. So not really a great fan of this kind of trading, and we don't see any flags, we don't see any major anything that suggests that we're going to see acceleration move higher, but we'll keep trending higher. That's just and that's because of the euro dollar's dominant downtrend. As the dollar gets bought here, it will exert pressure on the USD JPY. What about the pound? Well, we have the BOE coming up today. Now what really surprises me is that markets expecting a hike here. This is not how a currency behaves when the market is expecting a hike. No, we haven't even tested this 50 DMA here. While the euro dollar is at the 50 DMA, the GBP, after having fallen 1300 pips, has not even found it important to just rally a little bit. Nothing is able to get this thing moving. That tells me if there is a hike, we could see a rally to 32.50 or something. Wait for the day to get over, and we'll be very interested in the euro, in the GBP pound, in the GBP dollar pair to short it back below these lows. So that's something that is in my mind. It's a manual trade. I'll see what the model does. Model is not going to go long, but we'll watch how this works out. If there's a hike, it will go here, but if there's no hike, we're going to fall down to 1.29. So mark my words here, there's 200 pips here from right if the hike isn't there. But if there is a hike, we'll move at least to test this level here, 32220 or 32050, give it a few up and down, but then it becomes a very good shot. because I don't think the market is expecting another hike from BOE in a long time after this. So it could be a token hike. Market will just give it a little bit up move possibly, and at least it should. But we just don't know if it will, given the environment in which we are, and that worry that the Brexit, it's just a complete train wreck that is there, and then nobody knows what to do. So market is very uncertain. So I don't know if it will rally at all, but there's no way we're going to go long the Great British Pound under any circumstance. Even if it rallies to 1.36, you'll have to pay me to. Even then, I probably will not be going long the pound. So we'll just stick to the euro dollar with all the major events out of the way. ECB out, FMC, just NFPs left. But we think that price action speaks volumes here. We don't care much for the NFP. In fact, Powell yesterday gave a preview of what the NFP will be. He said job growth will be very strong for the next few quarters. So so a few misses here and there will not matter. We will see this moving down. So that's just from our side. I don't want to keep you hanging. Things are all looking very good. We didn't have an update yesterday. That was because prices weren't going anywhere. But this is the benchmark. Watch this line and the trend lines and the flag formation. I haven't looked at the yields, but you'll see that yields are also in line with. In fact, yesterday we had the US 10-year breaking above the 3% mark. There it is. Pull down a little, but this clearly is just a lovely uptrend, almost a broken head and shoulders. We could just proceed higher. That will pull the dollar index, continue to pull the dollar index. We'll also look at the dollar index. Again, this is just the antithesis of what the euro dollar is. It's almost a chart which has been inverted. But what's important to note here is that the dollar index is well above the 50 DMI. Unlike the euro dollar, which just broke below today, we are well clear of this level here. It's uptrending line. And we see this moving higher as well. So that's a call from us. Thank you once again. If you have any comments, charts, and you think otherwise, or you think we are right, do not hesitate in sending it to us. We don't send these videos to those who are only on the Algo 1, because Algo 1 just goes against the trend. Just be very careful in August for the Algo 1, because if this trend ignites itself to a 300 pip move, which it has done in the past, look at this move here, possible that Algo 1 will get into drawdown. But it's beautiful for Algo 2, because Algo 2 works on the trend. It just keeps going with the trend, and it just keeps money, it just keeps adding. There are times that Algo 2 has made 30-50% in a month in the past, as you've seen in the back test. I think August also is looking very good. So that's the update from us. Any comments, please don't hesitate in emailing us with your views as well. Thank you. This is Martin from LifeBot.